Right now, the reason that the refiners want 999, so silver maples, eagles, silver rounds, kilo bars, 10-ounce bars, 100-ounce bars, is because the refining process is almost automatic. You put all the stuff in a bucket, you heat it up, and you pour out a 1,000-ounce bar, and you do that all day long. Whereas if you do 90%, you got to re-refine it. You got to get rid of the copper, and you got to pour it again, and it's much more costly and time-consuming. From the commercial side is so strong, they want to expedite it. The only way you expedite it is turn 100-ounce bars, 10 of them in a 1,000-ounce bar, rinse and repeat.
In today's news recap, is Bitcoin really digital gold? In 2025, the leading crypto has failed to answer that question. Bitcoin's sharp pullback from its recent record high wiped out its year-to-date gains, and that's led to questions about aggressive price targets for the cryptocurrency into 2026. But as important as where Bitcoin's price goes next is a question about the role Bitcoin really serves in a portfolio. When will it consistently behave like a store of value? It's still going to have to prove itself as that digital store value over a longer period of time. Nate Gerazzi, Novadias Wealth Management president, said on the CNBC ETF Edge podcast, "For years, Bitcoin has been described as digital gold, a comparison that can be powerful and appealing to investors since gold is expected to protect portfolios during periods of broader market stress, moving in a manner uncorrelated to stocks and other risk assets." But for Bitcoin, the digital gold narrative is undermined whenever it trades like a risk asset during equity sell-offs. After two distinct periods of volatility in 2025, Bitcoin hasn't been able to provide a clear answer to the digital gold question. The track record thus far is mixed, Gerazzi said. He pointed to the tariff tantrum period of stock selling in April after President Trump announced sweeping global tariffs, a period of market volatility during which Bitcoin performed very well. That caught a lot of investors' attention, he said. But more recently, as weakness in technology stocks led the market down, most cryptocurrencies, including Bitcoin, also sold off. Bitcoin in particular sold off considerably more than the stock market, he noted.
Yeah, I think that makes a lot of sense there. So I guess moving forward here, as we look at the precious metals, gold is also moving as well, not as dramatically as silver over the last couple months or so. Silver's at all-time highs, and gold is still not making new all-time highs in the last month or so. So your take on where we are for gold?
Well, gold has been the leader, and being a student of the markets in total, but one that I would say taught me, maybe say the most, but certainly up there would be the late, great Jim Dimes. And he had, like the Dow theory, I don't know what he called it, but basically it was a precious metals confirmation. In other words, gold could not shoot up alone without, and be in a true new bull market without confirmation from silver and really from platinum palladium. Well, that's taken place. So there's confirmation across the board that the metals move as a group in a strong bull market, and they are moving as a group. The second thing is that silver will outperform at some point, and that, of course, took some time, as we both know, but it's not unusual for silver to play catch-up once this new phase of the market happens. And my magic number was 70-1 on the gold-silver ratio, and I think we were at 72 or 3 yesterday, but we've started to move down from that over 100 we were a few months back. And so we are intact for a new bull market. I think it's up and away. Hopefully it's a base and build with some massive corrections along the way. And I'll just give you a bit of a hint from my latest newsletter, my paid service, Elijah. And I put in there that I saw perhaps that we could get below the 4,000 level in gold again, and we could get below the $50 level in silver again. And I did not get too much pushback from my readers, but I did get some. And my take on that possibility is that on the metals alone, in the dynamics that we're sitting in today, if the status quo stayed as it is, and it never does, everything changes, probably wouldn't see under 50 or under 4,000 for gold and silver respectively. However, if we were to get a large sell-off in the equity market, the S&P 500, and it was significant enough, I could definitely see the metals getting under those support levels. And that's what I think is going to happen. Now, I've been wrong for too long, but it doesn't mean I'm wrong forever. But it's a stop clock. A stop clock is correct twice a day. But anyway, not beating myself up too much. I do think that we will see a stock market correction. The metals will go down with it temporarily. It will be a buying opportunity. But the new bulls, the people that bought at 50 plus, watch it go to 60 and are in profit zone, and then to not have a stop or whatever. I'm talking more for traders, but investors as well. I mean, if you buy it at 50, you pay a low premium. You buy a bag, and then the market's at 45 again. You get a little disheartened, especially if you're a new buyer. Again, I don't want to make a big thing about it, but I don't rule it out on those conditions. I don't see it happening again. We continue as is, but I don't think we will. I think that, you look at the high tech and the videos, how the Dow Jones and particularly the S&P 500 are weighted so heavily to make a construct that is really not showing the true broad width and depth of the S&P 500. You take 7 of the most popular, most liquid, and most traded stocks, and you base and weight the average upon that. It's really not telling the total truth. So I'm just making my case again that a stock market correction in my mind is well overdue. And I don't think I think it is out there in the future. Not necessarily, it could keep going up, but that's how I see it.
In today's news recap, cash is cringe, how Gen Z is redefining saving and spending. Gen Z may be the most financially self-aware generation yet, but new data from the Harris poll for Cash App shows that access and awareness gaps are slowing their progress. While 90% of Gen Z workers are learning new financial skills and building savings habits, nearly half do not know whether their savings accounts earn interest or if they could be earning more. The findings come as Cash App introduces a 3.5% APY savings rate for its teen customers ages 13 to 17, addressing the clear need for accessible, high-yield tools that help younger savers grow their money and build financial confidence early. Gen Z wants to save but isn't sure how to grow their money. According to the study, 77% of Gen Z say they would contribute more money to savings if they could earn interest. Yet awareness is limited. 44% of Gen Z with savings accounts know their current interest rate, 32% do not, and 16% are unsure if their accounts earn interest at all. Nearly half have less than $500 saved. What do you think, you guys, is cash cringe, or are just they broke? The data underscores how financial literacy and product transparency are shaping Gen Z's early financial journey. Their goals are practical and forward-looking, saving for emergencies, major life milestones like moving out or college, and experiences such as travel and events.
A few lessons with all the gray hair. And one thing I've learned is that over time, the premiums actually come back to normalize. So I actually just wrote an article, and I have it in front of me. I would read you part of it, but it's all about why the junk bag, or what I prefer to call constitutional silver, is really the place to look. First of all, that if you get that big a discount, why not take advantage of it? Secondly, the refiners are refusing it. Well, most of them, some will take it. That will go away at some point. And then lastly, the bag market does get a huge premium from time to time. And who's to say it won't happen again? I'm not going to forecast that it will. But if you look at Y2K, when, I know you know about that, you probably, whatever age you were. But, the rollover of 1999 to 2000, many people were worried that, there'd be a computer glitch. And many people bought bag silver because It's the most recognizable. It's small units. It's easy to use in a barter situation. And so it actually got like a 30 or 40% premium on the bag market rather than just, a silver 100-ounce bar or kilo bar. Now, again, I'm not saying that would happen again, but it could happen again. And also, I think it's a good place to start. I mean, the worst case scenario would be having the barter, but you don't have to look at it like, the banks are closed, I must barter. You can look at it more holistically, and what I do and have often done, and that's at a farmer's market. Local farmers, anything from, beef to flowers to all kinds of fruits and vegetables. And I take silver. Of course, I take fiat as well, but I'd say at least half of the people at the farmer's market will accept silver gladly, or in fact, prefer it in some cases to using fiat. And that exchange takes place. So it doesn't have to be a end of the world event to use, dimes, quarters, or halves in a transaction in those kind of locations. You're not going to get away with doing, I should say get away with, but you're not going to be able to make a negotiation like that at Walmart or Safeway or, corporate entity. But on a one-to-one mom and pop kind of operation, you can. So I think still, and I've done this for years, when people ask, I'm just getting started. I don't want to make a mistake. Where do I buy first? And then I ask them, I don't really want their net worth, but I kind of ask them gently, well, what's your situation? And once I determine that, for almost all cases, I recommend start with a bag of constitutional silver for the family. So in today's parlance, that would be 1,000 ounces face value, dimes, quarters, halves could be mixed together. And that $1,000 face is 720 ounces, sorry. And 720 times 50 or 60, 7/6 is 42. You're looking at maybe 40,000 in fiat. That's 10,000 per family member for a family of 4. And then I say, once you've established that, then I would move on to bars or coins or rounds. And the reason being is that bags are a bit cumbersome. If you've ever held a half bag or a full bag, like 70 pounds or something, it's quite 50-something pounds, sorry. Anyway, I still think that's a good thing. And regardless of today's discount, which again, you could take advantage of, if someone called me today and said, well, what would you do? That's exactly what I tell them today.
Do you agree with him? Are you still bullish in gold and silver? Is a massive collapse going to happen in 2026? Post in the comment section down below your honest opinion. Subscribe if you have not yet done so. And watch this video right here because it's a perfect fit for you. I'll see you on the other side.